Hello and welcome to Wake Up and Smell the Profit S&P and Q's review for Friday, July 21st, 2023. It's now 7:36 a.m. Central Time. We'll try to run through commodities as quick as we can, starting with gold up here hitting the bottom of the cloud a couple of times, which is unusual for gold. Sometimes it gets impulsive and just rips right through the cloud to the downside and to the upside, like over here. So to have it hit a couple of times and get turned away is somewhat unusual. Correlations for gold. Gold to the dollar, look at that, 100% negatively correlated. So the dollar goes down, gold goes up, vice versa. Gold to the 10-year almost to zero, still somewhat negatively correlated. Gold to oil, almost 100% positively correlated. So oil goes up, gold goes up, oil goes down, gold goes down. And the gold to the Japanese yen is 100% correlated. And that's unusual because the yen has been sinking a little bit and gold has been skyrocketing, so speculation in gold possibly. And gold to the Treasury inflation protected bond here is starting to rise. And gold shares, GLD, compared to the rest of the commodity complex, DBC, Commodity Index Tracking Fund, is not doing as well performance-wise versus the rest of the commodity complex. So the rest of the commodity complex other than gold is doing better than gold. And that is reflected here on the Commodity Research Bureau Index, CRB. It has broken out of this purple dotted line here. So it has broken out and is headed up. It's been a couple of days above that. So high commodity prices are the bane of Treasury bond price existence. So let's go see that. 3.831. It's definitely more elevated than it has been lately. You can see this is about when the CRB started breaking out. And the DBA Agriculture Fund ETF never did go into a primary bear market, but it certainly is in a secular bull market, 74.9% from the COVID crash low to the high over here. And it made it down as far as 16.2, but not a bear market. So, and it's been accelerating to the upside and is now hitting this resistance horizontal line here going back to March 2022. You can see it's placed nicely. A couple of nice hits here for resistance. Another one here, maybe another one there. Couple of whipsaws, and then high velocity to the downside, but not quite a bear market. So if this breaks out, then I would say we're not out of the woods yet, and inflation will eventually start taking hold again and ruin everything.